But let me also welcome Shivangi Sharda, who is joining us on the show right now, as well as we also have Ashi Anand on the show. A very good afternoon to both of you, and thank you so much for it.
Ashi, hi, afternoon. What's it looking like in the market? And seems like clear leadership from within banks. Anything that you may have added in your portfolios of late?
Sure, hi. Actually, our portfolio has been fairly stable. We've seen quite a sharp bounce back from the lows. Our kind of view is that the market outlook hasn't, while there are clearly certain things that have improved. RBI has cut rates. RBI is also easing up on liquidity. Oil prices are down. And the kind of tariffs have been kind of paused for a certain period of time. We don't yet completely believe that we are out of the woods with the kind of current rally back from the lows. You are now just kind of about 7 to 8% down the large cap indices from the highs, about 15% down on small caps from the highs. Given the fairly aggressive bounce back, I think we continue our kind of fairly moderate or conservative stance. We have about 6 to 7% cash across both of our portfolios. We're just kind of waiting to kind of see how news flows develops. We are importantly kind of just keeping a close eye on corporate earnings to see the kind of outlook on earnings going forward in the coming year before we really go in and look at deploying this cash. So at least as of right now, there have been no major changes at the portfolio level.
All right, but let's get back to the markets, and what we are seeing is a bit of a resilience that at least the index is showing in today's trading session. But on the flip side, it's the two-wheeler counters that are a bit under pressure. Stocks like Hero MotoCorp and Bajaj Auto are a bit under pressure on the back of the Jefferies downgrade coming in. But Ashi, I beg your pardon, what's your take and what is your preference looking like when it comes to the two-wheeler counters?
So two-wheelers is a space we honestly aren't very positive about. It's very important to kind of understand that when you are buying a company, you're buying a future set of cash flows. If you understand what's happening from a slightly longer term perspective in two-wheelers, this is a space which is going to see the most rapid transformation towards EVs. And I think the longer term competitive dynamics of EVs is still unclear. You don't really know how longer term market share dynamics are going to pan out. You don't know how profitability is going to pan out in the longer term. So two-wheelers is really a space where over the last kind of decade and a half, these companies used to have very high profitability levels, very strong cash flows, a fairly kind of a stable competitive kind of scenario between Hero, Bajaj and kind of TVS are dominating the entire space. But as you're getting into kind of EVs and EVs becoming a larger share of the overall market, you are going to get new competitors coming in. They will take in kind of market share. And as kind of different people are trying to battle to kind of gain market share, pricing and profitability is both going to get impacted. So while they can clearly be shorter term trading plays in the space as demand kind of comes and goes, from a longer term perspective, we see this as a space which is likely to see structural derating.
Right, interesting. That's the take coming in on what the two-wheeler space is seeing. And Ashi, can't help but ask about IT. I mean, yesterday almost seemed like one of those freak days when you had even some negative numbers absorbed very smartly by the street. Do you think a turnaround, at least for stocks, could be around the corner, not as much earnings?
Dependent on how the entire US kind of macroeconomy, trade tariff, what Trump is doing, all of that pans out. At this point in time, the levels of uncertainty are exceedingly high. You've seen very sharp corrections across IT companies over the past kind of 3 to 4 months. And this is corrections of kind of stocks that hadn't really moved earlier. So valuations are kind of exceedingly cheap. But they kind of take into account this overall uncertainty around the kind of US economy. Now, one of two things could happen, right? As in either you have this kind of trade tensions kind of continue, and what happens with US and China is going to be extremely important because that would have an impact on the overall economy, not just US and China, but global. If those trade talks don't kind of start and kind of don't ease down at some point in time, we believe IT could continue to underperform. But if you start to see some respite, given how oversold they are, there could be a bit of a trading pop that there is in IT. So it continues to be a space which is very good from a longer term perspective in terms of the quality of the companies, the profitability, free cash flow generations, etc. But you have a combination of an uncertain near-term kind of US economy. Corporates are accordingly kind of going slow in terms of discretionary spends. And there is a bit of a longer term overhang in terms of the impact of artificial intelligence. So I think until the US kind of outlook doesn't improve, the space could kind of underperform.
So that's the take coming in on the IT space.